What if the real problem isn't how much money you make, but rather where your money goes after you make it? That's one of the questions that we're looking to answer as we get into this infinite banking concept for beginners series that we're doing. And this is video number 1. We're going to take a look at what is the infinite banking concept. At its core, the infinite banking concept really is a process of building a pool of capital that you can use to go and finance all the different things that you would throughout your lifetime. The primary genesis behind the infinite banking concept is about being able to control the flow of money into and out of your hands over the course of your lifetime and be the person who profits from that process. At its most basic concept, the process of banking is the control or the flow of money at a cost. And all too often, the flow of money in a person's life today in our modern society is controlled through the banking system. And the bank in the banking system, third-party financiers, they're the ones profiting from all those different pieces. And at its most simple level, there's 5 components to the banking process. There is the borrower, the depositor, the lender, the banker, and the bank owner. And of those positions, the depositor and the borrower are the ones that we're taught most commonly. And those are the ones that actually don't benefit don't benefit as much from the banking process. They don't necessarily profit from it. Whereas the banker, the bank owner, and the lender are the ones all profiting from that banking process. And as Nelson Nash laid out in his book, Becoming Your Own Banker, which is this one here, which I highly recommend that anybody goes and reads and gets a copy of, is a sort of the premise for this conversation. He lays out how we sort of begin to lay the foundation for that and be able to take back some of that banking process. So Nelson Nash really found or discovered the infinite banking concept as a result of some of the mistakes he had made early on in his life, where he was over leveraged in some different areas, but at the same time had been accustomed to paying high premiums within his dividend paying whole life insurance contracts that he had. And what he had realized when he got into a bit of trouble was that he had all the financing capacity, or at least a large majority of it, to help bail him out of that situation. And he discovered that if he took over that banking process by utilizing those policies, he could put himself in a better position financially overall and sort of get the bankers out of his life. And that's a basic concept of what the infinite banking concept helps us to achieve. And it's something that takes time. It took Nelson close to 20 years to be able to accomplish that. But it's a process of utilizing a product to control the banking process. And it's really important to understand that the infinite banking concept is a process, not a product. The product we use, dividend paying whole life insurance through a mutual provider, is simply the tool that we use to actually do or perform the banking function in our situation. And the reason that we use this particular tool is for very explicit and specific reasons, which we'll get into in a different video. However, it's mainly because it offers our dollars a chance to be at work for us. Nelson lays out that there's only 2 places or 2 ways that we can generate income, and that's money at work or people at work. And all too often, we're simply taught that people at work is the way to generate income. Well, if we give our dollars more jobs, so to speak, or put our money to better use, we are then able to better profit from that situation for us in the long run. And one of the reasons we use this particular tool, dividend paying whole life insurance through a mutual provider, is that it allows for consistent returns, guarantees, tax-free transfer, tax-deferred growth, and in many cases it's tax-free growth when it's done properly. We also look at liquidity, meaning that we have access to the capital that we are creating and forming in our own system. We also get the advantages of creditor protection and no ties to the market. So we're going to have this uninterrupted compounding that's taking place on all of our dollars, even when we use them. And that's a critical component of this process, is that it's giving our dollars multiple uses, multiple functions, and it's going to generate longer term performance for us as a result of a larger proportion or a larger volume of dollars at work in our system. And how we get there is, that's why I highly recommend, like, if you're really interested in this, continue the rest of this series, but set up some time with me and I'd love to have a conversation with you about that. If we kind of think about how this operates in a high level concept, let's just say you have a portion of your dollars that flow into your hands, and we're going to place those into a dividend paying whole life insurance contract. And you're going to have a portion of those dollars become immediately available to you again within 10 to 15 business days, give or take. And what you're going to do is you're going to borrow from against your policy, not from, against the policy, the cash value in the policy, and go use those funds that are now in your contract, earning consistently over time, growing, buying you death benefit, etc. So that, again, it's doing these multiple jobs, but you're going to take a policy loan and you're going to go purchase whatever the things you were already going to purchase anyway. Then you're simply going to replenish your capital system just like you would if you were to save up in cash and go purchase something. You would have to replenish that cash at some point. That's what we're doing in this particular case, except we're using someone else's money, the insurance company's money, to go do that. And in the process, you're going to benefit from that repayment process, etc., because you're going to be an honest banker. You're going to charge yourself an interest percentage because there is no free lunch, so to speak, meaning that every dollar has a cost, and you're either giving up the future cost or the future interest that money could have earned, or you're paying interest to someone else. And when we use this process properly, there's a benefit to that for you in the long run. So at a very high level, it's kind of what we're doing. But in turn, what it's doing is it's generating this ever-growing capital resource for you to be able to use, whether that's going to be in the short, medium, or long run, doesn't matter. It's a system that is going to generate dividends for you. It's going to continue to grow, and that pool is not only going to benefit you, but it's going to benefit your future generations in the process. So it's this high-level foundational concept for money. And if we think about what's important in our lifetimes, it's creating strong foundations in which to be able to build from. And all too often in the modern financial system, it's not about creating solid foundations. It's rather this product, that product, whatever, to solve this or that perceived problem that exists, but it's not solving that root cause function, which is what we're doing with the infinite banking concept. We're actually solving that root cause foundational concept for money, that if we can control that process of that and build that out, that long-term structural foundation, we now are in a position to be much more successful in the long run. So that's really what the infinite banking concept is helping us to do, is it's create this foundational concept, this foundational structure that we can build upon for the rest of our financial future and future income sources. So in our next video, we're actually going to talk about what the infinite banking concept is not. So you'll see a video pop up on the screen here that's going to talk about what that looks like. But in our next video, we're going to talk about what the infinite banking concept isn't. And I think that's a really important thing to think about in addition to what we've covered here today. So thanks for your time, and we'll talk to you again soon.